But Karthik Kumar, fund manager, Axis Mutual Fund as well, joins in on the show right now. Karthik, hi, morning. Great to have you on the show. Karthik, what's happening in the market? I mean, what started off with mid and small caps underperforming pretty much all through the year now seems to be percolating to large caps too. Why this kind of selling, especially what we've seen in the last two odd trading sessions?
I think it's kind of difficult to kind of summarize in the short run, especially with last 2 days. But the essentially the breadth of the markets kind of gotten weaker over the last couple of days, as we've seen. But it's very difficult to draw a conclusion based on what we've seen over the last 2 days. I think we've got to kind of look at the larger picture and not be kind of focused on just these two trading days.
Sure, but the larger picture, you think, Karthik, that's also indicating to uh, more weakness or some strength?
I think the larger picture actually remains quite constructive if we look at it in the longer run. Because while if we start with earnings, for instance, the last quarter earnings season for the markets in general were better than what the expectations were. Although the expectations were quite muted because we took a lot of the earnings cuts up front, and hence the expectations were muted. But having said that, they still managed to beat the earnings expectations, and we are on track in terms of the percentage of earnings that we've seen so far. We are on track to meet our FY26 26 guidance market level. And also what we've seen is progressively the downgrades that we are seeing at a market level, at a stock or a sector level, progressively going down, and the ratio of downgrades to upgrades improving over the last 3-4 months. In fact, post the earnings seasons last this quarter, we've seen very little cuts, if at all, for FY26 and 27. So I think from an earnings perspective, things are supportive. From a valuation perspective, relative valuation, especially on the global side, it is also supportive as well. So for both those reasons, I think the market looks constructive in the longer run.
And therefore, are these good opportunities to buy, Karthik?
I would argue these are good opportunities to kind of build the book for a longer run, because as we've seen this year, Nifty is up, or the different indexes are up between 7 to 10% in local currency terms, whichever one you look at, and in terms, they are literally flat because of rupee depreciation. That puts us substantially behind FIIs. So even from a relative market positioning standpoint, I think we are looking better. So I think these are good times to kind of look at and build that book.
Karthik, what within the market looks most interesting from a risk reward perspective at this point to you?
Okay. So when I look at it from a quant perspective, from a style perspective, this year what we've seen is essentially good growth or good quality companies, be it in terms of balance sheet or just in terms of cash flow metrics. Those kind of companies have not done well, or the markets have not rewarded. In fact, it's, if anything, value stocks and low volatility stocks are the ones that have done fairly well through this year. I expect the market focus to go back to growth, to go back to quality. In a sense, look at more like GAR strategy, growth at reasonable prices kind of strategy, to kind of do well from a quantitative perspective.
Interesting. So, Karthik, what sectors does that make you bullish on?
So I remain bullish on financials. It's a good mixture of financials, both private sector, PSUs, and selective exposure to capital marketplace, not across the board, but more selective. And then remain bullish on autos. Prefer two-wheelers over four-wheelers, though I have exposure to both of them. And finally, kind of light on commodity-related plays, industrials and utilities.
Interesting. What about power, Karthik? How would you play that theme? It's seen a bit of a cool off, or rather, we're talking less about it. Give us your sense. Could we start to see a resurgence come early next year?
The timing is kind of difficult to pinpoint, because you've got a lot of things, moving parts in there. But essentially, I'm kind of neutral on healthcare space, with a bit more exposure to hospitals rather than pharma.
Why neutral on healthcare? Karthik?
It's just we've played that. So I've had fair bit of exposure through the year, and so it's not that I'm bearish in any way. It's more bottom-up call rather than a sectoral call. And it's just that there are better earnings opportunities and much more earnings visibilities elsewhere in the sector. So I'm not bearish that. I'd re-emphasize. It's just that I'm neutral that space.
Okay, so that would make you bullish on diagnostics, select pharma. If you could just elaborate a little bit more.
Select pharma and more hospitals.
Okay, more hospitals. And you
Yeah.
are finding bottom-up stories in hospitals. That's quite interesting.
Yeah. Yeah. Yeah, I do.
Okay. You obviously can't talk names, can you?
Yeah, I can't stock names. I'm sorry for that.
That's understandable. IT, Karthik, that's, right now being looked at as one of the safety pockets with not much to lose because it's already not participated and it's already fallen so much. But when is it that you think a material turnaround, if at all, could come by for IT? Are you of that opinion at all?
Currently, as it stands, I'm a bit underweight IT. I think IT is rallying for a couple of reasons. One is it's been the underperformer for the year, and then it's a natural beneficiary of rupee depreciation. But beyond that, the way I operate in terms of bottom-up stock levels, I need to see much more growth, visibility, growth, consistency at a stock level, which I haven't seen data at a stock level changing that drastically. So right now, it seems more like a top-down call rather than a bottom-up call. And I need to see more data to get kind of comfort on being overweight IT.
Karthik, you said growth at the right price will come back into vogue, if
Yeah.
I can call it, and will likely outperform the market. You've spoken about financials as being one pocket. Why not IT? Because growth could well come back, rate cuts possibly on the anvil, which could lead to growth coming back. So just trying to get a sense of that.
Absolutely. If 4 months down the line, we see more visibility in terms of growth, we see more, we get clarity in terms of growth consistency, then absolutely, then IT could be a play. But but what the data tells me right now is, as we stand today, that's yet to come through. What we are seeing right now in terms of sectoral moves is basically, as I said, partly it is benefiting from the fact that it's been an underperformer for the year, and there is an INR play that it is benefiting from. But we need to see much more data at a stock level to kind of make that tilt towards being overweight IT.
Karthik, what about new age tech?
New age tech still, we continue to remain. Again, it depends on strategies. Different fund managers play it differently as a house. But from a quant perspective, I remain underweight on new age tech as well.
Interesting. Great to have you on the show, Karthik. Thank you so much for your time and insights today.